Welcome to Business News Essay. Today we take a look at the pros and cons of small business loans. Small business loans come with a lot of advantages. They can help you finance projects, purchase equipment, and get working capital when you don't have enough cash flow. But taking out a loan comes with some downsides, too, including the risk that you could default on your payments and lose any asset you put up as collateral. To figure out if taking out a small business loan is the right move for your company, continue watching this video as we break down the pros and cons of small business loans. A business loan is money a business owner receives from a lender to invest in their business or to use for business-related purposes. A business term loan is paid back over a set amount of time, with regular repayments deducted from your business checking account. There are many benefits to taking out a small business loan. Here are a few to consider. 1. It expedites your business's growth. The funds from a business loan can allow you to put your plans into action sooner, rather than having to wait until your business has generated enough profit to fund expansion yourself. 2. You don't have to dilute your equity. A business loan allows you to get an injection of cash without bringing on any investors. This enables you to keep full control of your business and retain all the profits as your company grows. Once you take on an investor, that investor will get a percentage of your profits as long as your business is in operation. A loan, on the other hand, is a temporary measure. Once you pay it off, you will have no more obligation to the lender. 3. As you overcome cash flow issues. Any small business can hit a cash flow hiccup. This is especially common when a small business is experiencing rapid growth, since you may need to take on more employees and/or buy more equipment and materials in advance of getting paid. A loan can smooth out these ripples. 4. Is flexible use of the funding. If you receive funding from an investor, it's possible that the investor will have a say in how you use the money and could place restrictions on what it can and cannot be used for. When you borrow from a lender, so long as the loan isn't specifically for business equipment or real estate, there are typically no restrictions on how you can use the money. 5. Is can be less costly than other forms of borrowing. Business loans can often be a better value than using credit cards, overdraft, or a personal loan to get the funds you need. This is especially true if your business has been in operation for a number of years and has a strong credit profile, or you opt for a secured loan, meaning you put up collateral, as both can help you get a low interest rate. While there are many business loan benefits, there are some potential downsides. Keep these in mind before you make your final decision. 1. Is extensive application process. Since lenders extend commercial financing based on your company's ability to pay, they'll typically require extensive paperwork during the application process. You'll not only need to fill out an application, but will also likely need to provide 2 or 3 years of tax returns and financial statements, as well as a business plan. 2. You could lose assets if you default on payments. To ensure their investment is secure, many financial institutions require business owners to offer some form of collateral in case you can't make your payments. 3. You will need a strong credit profile. Interest rates typically depend on your credit score, both your business's score as well as your personal score. While banks often offer lower interest rates than other funding options, it's not always easy to qualify for those favorable rates. If you have a below-average rating, you could end up paying more for the loan than you'd like. 4. Lack of flexibility with repayments. With most commercial business loans, the terms aren't flexible. You'll borrow a set amount of money, make regular predetermined monthly payments, and will be expected to repay the loan in an agreed-upon time frame. If your small business revenues tend to fluctuate, a required monthly payment may not be ideal. There are advantages and disadvantages of taking out a small business loan. On the positive side, a small business loan can help grow your business without diluting its ownership. A loan also gives you the flexibility to use the funds as you see fit. And, if you have strong credit, you may qualify for favorable rates and terms.